What's going on, guys? Trader Romps here. So I've decided today I'd actually just pre-record me going through the prep. So obviously, if you're in the Discord in the community, you may have seen on Facebook, I have been putting up some preps, and they're basically an outlook on sort of where we are in the charts, where we are intraday, that sort of thing. So it's good for people who are high time frame traders because obviously they can just get some levels and be aware of we're sort of neutral, rotational, whether we're trending and that sort of thing based off the analysis that I give. Also good for those who are intraday traders, scalpers, swing traders on sort of those medium 4 hour time frames, 1 hour time frames, that sort of thing. So without further ado, let's get into it. Okay, so the time is 9:55. We're about to open. Doing the prep a bit late, but I wanted to today because we've actually moved on to the 1st of the 8th, 2024. So currently I'm still using across my daily charts, so my daily TPO charts, I'm actually still using just a tick size 55. There's a lot of stuff going on here. I don't want to have to change composites around. It's still respecting levels pretty well. So we are just using the TPO up here of tick size 55. And that's just being used at the moment on um, you can put your get your exo charts and get my workspace. I can do a more up to date one today as well to upload. So you can just basically just chuck it in, and you have access to these down the side here. You've got this order flow. I don't currently have these loaded, but it has the DOM. It has some more like time frame based charts. And we've also got some TPO for sessions as well. I don't really use these ones much, and sort of like another TPO here I haven't touched for a while, so it's a bit out of date. But you can see in here we actually have just some daily charts, and we can use these charts just to have a look at sort of where there's positive and negative market buying, whether it's from liquidations or whether it's from actual participants stepping in. We can look at the net longs, net shorts, and obviously we have a footprint bar stats down the bottom where we can sort of break down in numeric value exactly what's happening in the market. So that's the first part. I don't actually use a lot of this stuff. I sort of glance at it here and there. I'm more based around this area over here with the trend reversal chart, which we can we'll go over in when I do some streams and that sort of thing. I don't want to take up too much time. But what we will be looking at today is we will be looking at the daily market profile and the local composites and local candle shapes, and have a look at sort of where we rejected. We can bring a lot of some of these levels that are relevant over onto a naked price action chart. And we can also look at this is a bit messy at the moment because there's a lot sort of going on up here. Again, we're around those points of control, around those VWAPs. So we're always expected to have a lot of overlap from previous composites. Some of these composites here, I still have them outlined. However, with a lot of this area building through here, the more recent composites become a little bit more relevant. So let's go back over now to the prep. We'll also be going through the long-term VWAPs as well. We can overlay some levels inside of this area. We'll be doing a bit of housekeeping as well. So we'll be going to this area here, and I'll be adding some of these levels and giving them folders. So I'll try and be pretty quick and not drag this out too long. So the first thing is we go back over to the daily prep. Now we want to look, is there any impactful news events? So if you come over to forexcalendar.com, you can get this up yourself, and you can, under the little funnel button over here, we just want to have this red one, expected impact. And for currencies, we just want the USD. So obviously there'll be other international news, but the heavy hitters for the crypto market is USD. So it really just isolates, what sort of news will be coming up. So if I just click this refresh button now, just always refresh your charts on a fresh day, refresh your browsers, that sort of thing, so you don't get caught out. So now that we're moving into Thursday in 1 minute, the main thing that we can see in here, we have unemployment claims. So that's going to be at 10:30. And we'll just put that in here. So unemployment claims at 10:30 p.m. AEST. So whatever time zone you're in, obviously just do the conversion, but for East Australian time, it's going to be at 10:30 again. So we know that if anyone's up tonight, and for those who are scalping especially, if you're getting in and out of the market and something looks good, just remember you can get whipsawed, which on a higher time frame chart ends up looking like a Darth Maul candle. So it's quite hard to participate in that if there is volatility that comes along, because essentially you're going to have like this sort of action happening. It's going to happen so quickly that even if you get a good entry here, you might not have time to react to get out here. Then you get swiped here, and then it goes back up. And if you're a chaser, then all of a sudden it's done this again, and then you're panicking and you're selling out. And you can very, very quickly damage your account. So that's why, for me personally, around news events, if I'm not already positioned. So for example, earlier on in the day, we had a level, swipe that level, mousetrap, whatever, and I got into it, and it's progressed throughout the day. And now we're sitting somewhere up here. I might have my stop loss down through this area here, but I know that there's news on. We're coming on to, 10:20 at night, well, I'm going to start to think to myself, I might have to drag my stop up somewhere here, even though I might feel confident in the direction of the chart overall over the next few days, whatever it be. The reason why I'm doing that is because we don't know what kind of volatility is going to come into this market. So essentially what can happen is if this did this stop loss here on normal, this sort of normal rotation, if it went through here, ping, I might make a few dollars. But if this type of action happens, because this volatility is increased, I might not actually get stopped out until my entry was here. It could be further down here, and I'll have this very rude negative P&L in my account. So it's always important to understand that stop losses does not mean that you're going to be actually getting out right on that level. Because remember, for every buyer, there's a seller. For every seller, there's a buyer. So if this is absolutely killing it, there's heaps and heaps of people selling, then you just go in queue and it just basically waits, and a market order is best fill. So your slippage from MM3 course, like the waterfall effect, these sort of reactions can really damage what's normal volatility. So that's just why it's good practice that if you are already in a trade, you might, move up somewhere here, get ready just to get taken out. It's annoying if you get taken out, but whatever, you can always go into the next trade. But the main thing is we're protecting capital, rule 1 and 2. And, maybe it is just something like this, and then it sort of just goes back to normal trading after the news settles. Nothing was too crazy, the market just overreacted. And if that's the case, then you can potentially move your stop loss back down, because you might see some FVGs or something in here that you think to yourself, yeah, you know what, on normal rotations, I'm happy to weather that and, get out of break even. But with that, we don't want to take that risk. So sort of just give you a little example, but I've ranted on a little bit. So we'll go back to the prep now, but hopefully that's a little freebie to take home with you. So what we're going to do now is we finally have a new open. So, and we have a new open on the monthly as well. So we could actually just come over here for a second. And it'll be good practice anyway, just to go into a monthly chart, have a look at a little bit of the price action, see the candle sanger that's being formed up here, have a bit of an idea. This isn't the all in all because I have a lot more technical stuff that I can look at. I, don't really just base off like a candle, because obviously this thing can just easily roll back over and head lower. Higher, obviously seasonality as well, states that we're in for 2 months of downside or sideways, basically. So, all this sort of price action now is not really due to happen until, late October, during October. So we've got August, September, and during October we might start to get reaction higher or a bit more movement, because we're going to have those kind of red months. So we know with seasonality we can sort of expect that sort of boring price action towards the election, and that just sort of goes into our bias. Like what are we expecting? What type of volatility are we expecting? So if history does rhyme, then that's what we'll be looking at. But nonetheless, what we can see is we had this, not a terrible close. It's sort of just consolidating through this area. You can say that we've had a monthly swing file pattern and off this sort of local area, off this local low, and it's not too bad to look at. So again, this is something we can cover on stream and we can go through all that sort of stuff. But for now, I want to just get back to getting this prep out to you all. And for those watching after, it can just be a good little exercise as to how we get through it. Okay, so we know that we have the unemployment claims at 10:30, and that's all well and good for now. So I'm just going to get rid of this browser here for now, just so it's out of the way and we can just move backwards and forwards. I normally have all of these on my screen, so I apologize if I'm sort of bouncing in between them trying to find them, because I haven't yet sort of got a single screen flow going. So we're going to start with the market profile, okay? So the first thing I'm going to do is work from high time frame to low time frame. Now, in this case, I'm working with a monthly profile. So I come over to here and I've got my weekly and monthly set up. And on the right-hand side, I have the monthly. Now, how the monthly is set up is I'm currently, as I said, I won't go through all the settings and stuff, but what I will say is you can basically just get my workspace and just have trust in it. And if we want to talk about like all the technical jargon of setting it all up, we can do that another time. But as for now, I'm just going to reset the profile so we can actually see what type of profile that we got. So we sort of went not quite V-shaped distribution profile, but nonetheless, we do have an LVN, and it's not a crazy LVN, but nonetheless, I'm just going to get rid of that old composite. I want to actually now get rid of the 4-month composite. And I want to keep the 4-month point of control for now. And here was the 5-month CVAL that I was sort of talking about in yesterday's prep. So what we're looking at now is the first thing, based on narrative and everything, is we can see that we actually put in this sort of sell tail last month, but we also can see we had a buy tail. So when I see something like this localized, I immediately think to myself, okay, so we have some direction going down, we have some direction going up. Had this been a poor low down here, so poor low being something I can show you after what a poor low is. It's basically if you have two little squares or more stacked like so, with lack of excess or shadow or wick on a trading view chart, we know that there's a lot of stop losses below here, which becomes a draw on liquidity, which means like it gives purpose for this to come back down into here. But the difference is here that we have the sell and buy tail. So nonetheless, what we do actually have is the inverse of stop loss stacking. And inside these two areas, we actually have a lot of potentially offside and onside short. So there's still liquidity in here, but what it tells me is we're more likely to hit an area like this and push back down and hit into an area like this and push back up. Because of that amount of wick, we have so many people going long, people who will protect, some people went short, they'll protect, but we also have a lot of people who went to break out long and break out short, and perhaps that they're not very, very high leverage. They're up here and they are hoping that they can get out of break even. So they market sell or get out down here, an old short becomes a buy. And those who went long here, and they may have only got semi filled even, their limit order might still be sitting in their account. We have two forces pushing back up, and likewise up here, we have the two forces pushing back down. Now, obviously, near the ends of these areas as well, we're going to start running into liquidations. It's just how the machine works, the engines work. So when we're getting to these value extremes, you start having liquidations. So it's a perfect area for somebody with millions of dollars to load up a short, and this area here is a perfect area, millions of dollars to load up a long. Because liquidations, people finally breaking even, and not exact that the other people wanting to participate to push higher is probably the only thing that's sort of against them, because they want all this liquidity basically to be hitting into their account, and they'll use limit orders to absorb all of this, and they can get up and rotate back up higher again. So that's just a little bit of an explanation between poor highs, poor lows, and excess. So excess is basically just where it's sell tail and we have a buy tail, like so. Now the other thing to look at now in the month is what kind of candle shape do we have? So we sort of have this V-shaped profile, sort of double distribution. Now what a perfect double distribution would be you can see how the time has come out here, but the time hasn't come out here. So we still say this is linked more towards the point of control and volume, point of control getting higher, T for time, V for volume. And having said that, I can't do it in this software, but what you sort of can do is you can put a split here. So putting a split here at the moment and ignoring this until we're below this level, then this comes into play. But what I would do is I would actually have this as its own independent D, and then somewhere down through here, it would automatically mathematically generate a new value area low, which I'm going to think is going to come in around the 5-month CVAL. So I can realistically, it doesn't really change anything because we'll combine all of these together, but I would like to see a more refined level if I had been able to just include these days and just this D profile and leave this as just a profile down the bottom. But nonetheless, it doesn't do a great deal. And I'm sure even if we did that, you'd still be surprised that the new levels come in quite similar. So where are we opened? Well, we have previous month value area high, and we have previous month value area low. Therefore, we remain rule 1 and 5. Balance is all we know, and we expect more until proven otherwise. So we're just going to remain rotational within here. And if we're looking at seasonality, there's a high chance that, I would like between these areas here to hold. I don't want to really see this low again. Anything's possible. We need to expect the same until there's a shift of condition. And the current shift of condition states between here and here, just on the previous monthly level, not yet on the composite level, we are rotational. So we need to expect that. We know that trading around here is shit because we get into the POX and you get all this messy stuff, then you get a shoot, then a reject, and so on. So we want to be trading the extremes. Now, obviously there's trades on the lower time frames, but this is just for somebody who just trades this chart. They want to wait for the extremes. Now, there is the anomaly, as I said, which is this little gap in here that comes in right under what I haven't put this level in yet, but I'm going to see that it actually still lined up from yesterday. It can give a little sweep in there, fill in this little area through here, and then we can reclaim. And that could be a good trade entry off that inflection point there. But we yet to see it. So that's just a little hypothetical that we're coming up with at the moment. So now that we know the B shape, we know that the two ends of this is balanced, and we know that we've opened balance within the previous monthly profile. We pretty much can go and write a bit of a report on that. So we'll say monthly. We'll say new monthly previous, or I should say, sorry, new previous monthly profile. We can say it's a B shape. You can even have the anomalies inside because I've been talking about it. So equal excess in high and low. which is a buy tail and a sell tail. What we also know is we remain rotational within the previous month value high and previous month value low. Now, I don't really want to bring in these values until we're close to them. Otherwise, I'm just filling up this prep with too many numbers that can be, a little bit over the top. So what I want to do now is I want to actually pay more attention to the composite. So we head back over now and we'll actually create a composite. Now, how you do this is you can do it a few ways. You can right click the profile in front and you can click merge profile, or you can right click the last profile and say how many you want to put in. So this is the fifth. We want 4 behind it. So we'll say, let's put in 4. And now we have this 5-month composite. Now, yesterday I said we're probably going to be around here and how we lined up. So we can just come down through here and we can go, okay, what do we got? We got it's moved a little bit overnight, migrated a little bit down. So 62, 100. And then we can go in and we can just clean this up. I like to refine things by if we're sort of above, in this case, if it was 62,097, it would be 62, 100. If it was 62, 093, I'll take it to 5. If it was a 2, I'd take it back down to 62,090. So sort of just rounding it up each time. So a nice, clean 62, 100 is going to be a very strong bullish under the sand moving forward. So we can have a look at a bit of this profile here. Now the profile itself coming off this thin spot, there is a lot of, because this was so thin, this could get attacked and move back up. But again, we're sort of just jumping the gun for now. We are still trading what? Rotational between this 5-month composite. So what I'll do is I'll take note on a few things. The first thing is the VPOC is 66,900. So we'll come over here and we'll go to price and we'll say 66,900. You could say 67,000 still because it is psychological and a lot of people aren't looking at this. But for the sake of it, $100 difference on a higher time frame, it's pretty close. We want to be more precise on lower time frames. We're now changing this to the 5-month point of control. Now, one more level that we want to be adding in now is this new 5-month value area high. So we pretty much get it just to line up. We double click over into this axis over here. We'll come over, we'll double click, and we'll make him orange as well. Similar orange, doesn't really matter. And what are we refining it to? So we'll say that's looking pretty good. I'd say it'll be 70,140. And we're going to put that as the 5-month CBA. Now, another thing you can do as well, sometimes I add these levels in, sometimes it gets really messy. So if you know what you're looking at, you can actually just get a rectangle and you can line it up close enough, doesn't really matter, just something similar, something nice. We'll bring the rectangle over to the bell there. We've taken note, you might want to record where your volume and your time points of control are, and they're a lot higher. They're similar to the last sort of 4-month and weekly levels anyway. But what we can then do is right click and we can say reset all TPOs. So now we know where the 5-month composite is. We've even in this case marked them all out. But now we can still keep an eye on recency, which is the local profile that we're still going to react around. And then we're looking at duration. So we have these two levels. Now, what am I looking at here? Well, duration versus recency states that at 62,100, which is I think a little lower than where our 4-month point of control was, brings us a little bit closer to this sort of little LVN through here that would split. So as I said, if this was the distribution D, value area low, this means responsive buyers will step in here. It could be deeper, depending on liquidations, but all we know is we look for 2 things if we get back to this level. We'll bring this level to our execution panel. I'll do that on stream. I'm not doing it today. I will be doing it, but I don't want to go too long because it's already going to take a while. If we come down and we get a nice strong ping off it, that little P-shaped profile, and it just sends, I'm in. If it drizzles around and comes down and stops me out, that's fine, but I want to be there because we could get a mousetrap. That's where we could fill in this little gap through here. I will wait a bit longer for that. So if I need to do a bit further analysis for a mousetrap, I can attempt it. And again, if I get stopped, there's my 2-stop rule. I'm no longer participating. I'm not shorting here. Why? Because the shorts are up here. What I will do is maybe it goes for a 3rd one and it gets me out. And I'm like everyone else, for fuck's sake. But what I'm going to do here though, is on the trend reversal chart, I'm going to start seeing where the open interest, where people are interested. And if I find out that this level here has some sort of anomalies or imbalances, I can wait for a shifting condition, smart money concepts, and it can come back down and I can get my entry here, which was similar to this entry here. So I'm giving myself the benefit of the doubt to get into the wick. I'm giving myself the benefit of the doubt to get in case it is like we had with the 4 month. I've just run straight away, but I'm only going to do it twice because if I keep doing it and thinking mousetrap, 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 I have no account left. So I hope that makes sense. Okay, so what we're going to do now is it's going to take a little bit longer because I want to run a little bit of an example here. But we're going to go and put these levels into the prep, obviously. So we'll come back over and we'll say we'll go monthly composite. Today we have a new 5-month CVA, and the 5-month CVAH comes in at 70,140. 70,140. The 5-month CPOC comes in at, what's it, 66,900. Oops. And the 5-month CVAL comes in now at 62,100. Perfect. And let's just recap again on anything else that we wanted to note in here. So we could say, I'll start here, we'll say at 61,745. At 61,745, we have a LVN anomaly. Can't spell it anomaly, always never spell it right, where price could potentially reverse if we don't get a strong immediate reaction off the 5-month CVAL. Okay, so that's, without going on too long, it's probably, I could diagnose this for a lot longer. And obviously, if you have this yourself, I don't have to make the prep so thick because you can still go, okay, here's the value area high, the value area low, and it's sort of any other anomalies we have. Now, I've talked about other anomalies before, but I'm not putting them in the prep because it's going to fill it up. But because we are rotational in here, it doesn't matter. However, just like on any time frame, we have equal highs coming in from May and from June. So this high here and this high here has a bunch of stop losses. Now, why did this get held down like this? Because we had this. And this is where we had a lot of trap breakout longs wanting to push higher. And at the same time, we have a lot of smart money shorts coming in. Therefore, we know that we have protection from here and we have mitigation from here. So each time it came back up into this area, even this was, can't remember, I remember I was watching it, but there was a reason why we didn't sweep the high, but this in itself could have also held price a lot lower. But obviously we mitigated this part of this wick and they were hungry for the fact that they could stop out just the tippy tops of these ones. And they could also grab a little bit more of this pie over here. So I hope that makes sense. On the streams, we can go over that sort of thing. Okay, so at the moment, that's pretty much the monthly. Now, I'm doing something a little different today to help you guys out. It takes a little longer, but it's something I want to do as well. So what I'm going to do is I'm going to come over here, and just for now, I'll probably use, what do we got? We'll set this up shortly, but I just want to use, so we'll use this chart here, okay? And I'm just going to turn off the indicators, and we'll just stick with the daily. And we're going to come through now, and we're going to add in, I can just go quickly off here. I'll chuck a line in, and I want to make the monthly composites purple. And I'm going to have a look here. So we have 7140, 7140. So we'll come over and we'll go coordinates 7140. And we're going to put that is the new 5-month CVAR. And that is pretty much our gateway bearish line in the sand. So below this, within the composites, we are currently bearish. And we know that this has actually shifted down because Coinbase, when they put this sweep in, was a lot further away. So the 4-month is a little higher. So we now have a closer value that's been pulled down here. So the next thing that I do is I'll just drag this one here down. So how I do that is I just control or command, click, hold, and I drag down. And the next thing that I want to be doing is looking at 66,900. Okay, so 66,900. And I like to change the style of box. I'm going to make some dots. And we're going to call you the 5-month composite point of control. Now we stepped in on a lower time frame. Let's have a little bit of a look how we responded to that point of control. Well, sometimes my pen screws up. So we can see that we tried to bounce off it, we rejected, put equal highs in, put more equal highs in, put more equal highs in. So we can see just how much we could not reclaim, even to get up in these FBGs after the New York session with that high end through the top. Okay, so we'll head back out to the daily again. We'll just finish putting these monthly levels in. So we'll grab that one again. We'll bring him down. We want to call this one the 5-month CVAL. And I'm probably just going to put, it's not a global, but I'll probably put, I'm going to call this one last stand. Because below that, we head back towards developing yearly VWAP. So we'll put the last stand in there. We're going to get the coordinates correct. Oops. And they are 62, 100. So we'll go 62, 100. And now we have that last stand. And if you are a naked price action trader, we have a FBG, and that little distance underneath it would probably line up with the monthly TPO low volume node anomaly. So as you know, FBG, you sort of want to hold that middle point like an order block if we can get it. So a sweep under here would be pretty nice. Okay, so clean you back off for now. So once you do something like this and you've got these levels, we want to come over and do some housekeeping. So we can shift grab all these levels and right click, create a new group. We want to change the name of this group, so we'll rename it. And we can put 4-month composite. We can lock them so we don't accidentally shift them, and we'll turn them on. Okay. Okay, so we've got those levels in. Let's move on from the monthly. Double check that we've got everything in there. Pretty much for now, I think that's looking pretty good. Okay, so now we are working on the weekly. So let's go and have a little look with the new week that's come in and sort of recency and duration. So we'll close this one and we're going to open up this one here. So we can look at the origins of things at the moment. The main containers, the main composites that we've been held in is we had this 2-week down here. So we know that this is going to be a very, very solid level. We can then look at the fact that we also have this 2-week through here, which throughout the weeks, we got kicked out at one point. We tried to hold, we opened, we put excess in the high, rejected very quickly. We have a thin spot up here that we've left behind, so we could break that composite. We can make that a D shape. This is a low volume area that will probably push up here very quickly when we finally get back up to it. But naked price action, that looks like FVGs and that sort of thing as well. So there's still plenty of thin area to mitigate as levels build within inside that. So maybe I said something silly before, like let's look at the new weekly. I didn't mean that. It was a new monthly today. We're obviously on Thursday, currently in this developing week. So this is how I get the composite for the 2-week. So it's got so much more in these edges because it's got 2 times the amount of a week. So single week, single week. Now, just quickly, you're probably wondering, how do I know what is and what isn't a composite? Sometimes it's very hard to work out. It becomes a bit of discretion. Over the years, I'm getting better at it. Sometimes you just have to test it and see if it works or not, which is not an ideal thing. Conservative traders, if it's not clear, it stands out like a sore thumb, you don't trade it. This is how some people are just have ridiculously high win rates because they don't gamble. But for instance, everything's a distribution profile. So I've just got to get my pen working again. Sorry, it just sort of keeps cutting in and out on me. So everything's a distribution profile. So for instance, we have this distribution profile here, and then we have this lovely balanced D-shaped area, open like here, but we open below. So we just continue to migrate down at this point. We did open rotational. But what we can see is we need to have this being that 70% of value. So just the 70%, ignore the the above and below the value area highs and lows, we just want that 70% of value to cross at least 50%. Then we get a composite. So sometimes it's perfectly easy. So let's say here, if we have the 70%, and let's say we had, well, like, say 60% of that value, or I should say like, 80% of that actual 70%, where's the next amount of value? Well, we had 100% of this 70% with inside, that 80%. Therefore, it's a composite. But then what happened here? How much do we have of that? What, 20%? So that is not a part of the composite. So we're looking for the blue areas to have at least 50% overlap before we have a rule that we're allowed to make it a composite. Now, there's a few other times as well. For instance, you could still have some overlapping, but it's sort of like what we have to like this week. If we close down here, you could still argue we have the 50%, but because we've closed so far away from the area, it's something that I might compose, keep an eye on, but I really, really like it even more if we reopen with inside a building composite, because once you've shot up, you put single prints through and you've opened up here, then even if a lot of the weight's still down in here, I see this as trending and I don't really want to be incorporating these values into higher area that can annoy, like sort of annoying. Like sometimes you might put it in and you go, oh, look, it actually did respect. But that's sort of something that I do, that especially if there's single prints and we're getting a breakaway, I, again, would like to be able to profile split. So we could still incorporate that little bit into the composite. And then the new profile is a breakaway from value, which is a shifting condition. If you've done the course, everything I'm saying is pretty easy to understand at this point. So what we currently have here is we can look at the origin. So again, market profile is about the origin and reading the story of what happened. So we went right back here. We had this low volume area, which we sort of had one on under the monthly composite, which could be a bit of a risk. But these become like toothpicks and they can snap. As soon as enough weight gets built on top, it can come down and have to finally ask the question to the market, is it actually worth this much? And that's exactly what happened here. So we've come down into this area here. If we move further back out, let's have a little bit of a look just for argument's sake. So we had this composite down through here. We can have a look to see if we actually tapped into it or not. No, we didn't. We front ran it, which is all good. But nonetheless, we've come down through here and there's this tiny little area through here that we've actually bounced off and put excess in. So again, not everything's always going to be perfect, but that's how it works. So at the moment, we have this 2-week composite. We had this breakaway from value. And then the next day, we had another breakaway from value. So if I was looking at this on a trend reversal chart, if we had opened this day down here, obviously we could still come up and test the point of control or retest the 2-week CVAL, because that's sort of what you see on the trend reversal all the time. It comes up and it will test like the point of control, or it will test like a thin spot like in here, and then it will just ride down. And then again, you can consolidate and come back up, test and ride it back down. But at the moment, what I saw was because we opened up here and we opened within 1 and 2 weeks of value, we needed to expect that this level now for acceptance will hold. And what do we get in a rotational manner? A traversion to the other side. And that's exactly what we got. Close my long right out just there, due to that being the 4-month CVA. So obviously it was a bit higher at the time. Closed out and rode down. So how are we looking currently here? Well, the week's still developing, okay? But what we are noticing is we have had this rejection, and this is where the story comes in. The story is what happened. Well, what happened was we were unable to remain imbalanced up. This failed. The next target would have been the volume point of control and this naked value area high on the high of this area. And if we pierce that, I'd probably say that we could get a rejection from here. But this is where on the monthly, I think it might be on the monthly, or is it just a similar anomaly? No, it's not. This is a similar anomaly than the monthly. We have these equal highs sitting here, which will more than likely get swept. We have a naked value area high right above it. So this here, due to this, would be, obviously take profit, would have been take profit, and then would have definitely been take profit. Why? Because pretty much above here, we get to open sky. And it's just as easy as putting another P-shaped profile in here and rolling back over. And why do I say that? Because at the moment, we remain rotational. We don't take longs in the highs. And you could say, yeah, but what if it does put single prints in? Well, you're absolutely right. I probably would always leave 25% left open just to run. And then I'd have some invalidation where clear as day that we've got the P-shaped profile. We open in the low, and I'm going to just get out before I get stopped. So that's the kind of thing you can do with market profile. You can read the profiles, have a look at how it's going. We can see that we have this P-shaped profile. We can see that we have the spike above. And now we can see that a lot of volume's going in the low. But until Monday closes next week, and on trend reversal, I see this all the time, we're back at this point of control. So a close below that point of control can send lower. Now, this is a weekly basis. There's so many other lower time frame factors telling me that at the same time, we could rotate very quickly to this naked val, which is 62,450, which is the old 4-month CVAL. So what are we coming in at now? Just quickly for a recap again, we had the 5-month, and the val is 62,100. So if we have 62, I'll update these later, but 62, where are we, about 100? Where's that? Well, we're probably going to bypass this naked value area low, but this big juicy excess, as I discussed earlier on, about the trap shorts and about the longs protecting and about the long liquidations coming in, is going to be a very, very nice replenishment, and it's got the 4-month LVN in there. So that will look like for a rotation high. Now, if we can bounce from here and close back, probably, well, this is all migration value, so this will all change. It could change today. But we're looking at the previous profile in the CVAL. So obviously we have, I've got 4-month pockets, the same thing really, 69, what was it, 67,900. But this area here, 67 still looks really good because it's got that flat body on top. So I'll probably still go off the psych myself. But what we're actually looking for here is we have the 2-week CVAL, we have this little little LVM pocket, we have this value area high, and we have this migration going on. So I would like to see next week, if this were to remain bullish, simply a reclaim of these 2 lines in the sand, because that would then tell me that this held, this pushed back up, B shape, especially in the lows, tells me all the shorts going in, and then these, you just light these on fire and they just can ignite for us to push higher, at least back up into this excess here, or then basically become rotational within this top profile if we need to build along this edge to move higher. That makes sense? Okay, so let's start to record, what we've got currently. So as far as the weekly, what have we really progressed on here at the moment? So we can basically say weekly, we have rejected the 4-month CVA again, sort of repeating myself in some of these. Just gonna shift these around, it's a bit annoying. So we rejected the 4-month CVA, the 2-week CVA, and we have rejected the 5-month point of control. And we're at on the weekly, so we'll say July 15th. July 15th, point of control. So we want to see strength on the developing, trying to reclaim the previous week value area low. We actually do capitalize because I did say I was going to start doing that. Previous week value area low comes in at 65. What we got here? 65. 660. 660. Okay, so we'll go with that for now with the weekly, as it's still developing. We did open in this high and we rejected. We haven't closed yet, so it's not really a lot going on here. We just know historically where we rejected from. Seasonality also tells us we can go down lower because of seasonality. If this were also a green month, higher chance of this hypothesis playing out, but because of seasonality in history, we do start looking towards these pockets down here, and we know we have that confluence of the 5-month down here now, and we also have the monthly LPN, and we have this excess. So this area down here around that 60, 62, 60, actually, yeah, probably call it, what did we say it was? We'll refine it more, obviously, with the daily levels and trap and stuff as we get to it, but we're sort of just looking within the upper edge of, you could even say here, just having a quick look, is you've got where there were single prints from here, and we have down through here a BPR. So you could even say that this is a weekly BPR, So what's going for it? We had a rejection once, which makes it a little bit more, something to actually look at. Then we're close to it. So we have pre-mitigated it, but when we pre-mitigated it, we had a lot of breakout shorts down here. So essentially if you rotate down there and back up again, you're going to obviously somewhere in here, even 50% of the wick. You can get on a naked price action chart. So 50% of that wick there has a 2 weekly BPR that could offer a bounce, and it's beautiful because we lose the 5 month CVAL, and so a lot of people, like, obviously this becomes a dangerous area because a lot of people can do that outside break where we do rotate back towards the 2 week and the developing yearly VWAP. However, like, we buy down here. We don't short down here, ideally. Sometimes lower time frame, you get nice clean, you get a bit aggressive, comes back up, you stay in, you rotate lower, it's a wicked trade. But generally, yet again, we're looking for the shorts up here, and we'll be looking for, that was a nasty false. You're not looking to get in front of a steam train, but obviously we'd be looking for the longs down in this area with everything mentioned and the monthly. So we can probably say that we have, I would even just say, looking at the 5 month again, coming in at 62,100. So just going to adjust this quickly now. Very annoying sometimes. So 62,100. I'll just double check because there's a lot of numbers going on. 62. I don't know why it's doing this to me. 62,100. And you are now the 5 month CVAL. So we can see pretty much from that, that's 62,100. So what we could say, 62's there. 62 site could be good, but I'd even come down to the top of these single prints to start looking. But we can see if we can refine more things on that. Okay, so what we can probably like pop out here at the moment is we can still just bring in, we've got the point of control, but just for argument's sake, we can get this 2 week CVAL. So 62, 67, call it 260, yeah, 67, 260. I can't remember what I used to have it, but 67, 260 sounds good. So coming over here, 67, 67 to 60. And I'm just going to change you out. You can be orange, make you a straight line, and you are the 2 week CVAL. And you can pretty much see how each time this has been a level in my little mouse sometimes plays up. We can see that this again has been a level that it's tried to push out of, failed with the equal highs, out of the excess. So this is bringing out the TPO and seeing the exact same thing. Standard high, actually there's stops up here, but like they're not like dramatic in the excess. So above this area, we can start getting a bit of a clean run higher. But we can see that like we did attempt, looking at this daily over here, we've attempted, we failed, we rolled underneath, we retested, down we rolled. Then again, we've come up the other week, we failed, we bought up out of whatever levels that we had down here. Again, we sort of have this area through here, as you can see. So we bought up out of that area through there, try to get higher. We had that swing fail pattern. We also have the 4 month CVAL, and we rejected it once again. So this level here going forward is again, a more localized but important line in the sand. So, sort of how we'll put that is I'm just going to put like it's a bearish line in the sand. But if we were to go and add on quickly the 4 month composite, we can see that this area, so getting above 66,900, it's going to still require to push higher. So if there were a recovery, this could be a trap. So you can't just see a reclaim up here and go winner, winner, chicken dinner off the all-time high. No, you've got that as a take profit if you get off there. And if you go on a low time frame, it might not even be worth the risk. Therefore, what do? Well, we need a reclaim here. When we do, we actually, the better trade to continue, a continuation trade is there. Because what we can simply do is come in here, spike the high, and then we can just rotate lower again. And then I know lower time frame, there's actually some FVGs, liquidity and stuff. So this here could potentially be a good short trade if we do decide to start chopping around. So it's just thinking like that, being a little bit mindful of those levels. So at the moment, we'll just put you in as the weekly. And I also just wanted to mention, looking at this as well, We've got the 5 month, which will probably drop. I'm not really looking, like it could bounce, but I'm not really looking at this because of how close this magnet will be, being a higher time frame. So I'm pretty much just going to say 61,245, 61,245. Okay, that's better. So that would bypass the FVG. It goes through in the middle of this order block. So if you were to look at these order blocks, see where we've reclaimed here, see the bottom of these candles, see the bottom of this order block, it could be more of an extremity that we could very well front run. But if there is enough liquidations going forward, we sort of can say that this is sort of like a weekly BPR TPO. And yeah, BPR is balanced price range. It's basically just where we have the two FVGs. So you can see, you know, sort of this thin spot through here and through here and there. So on Coin, it looks like on Coinbase, compared to Binance, it might be a little bit of a different level, but nonetheless, like it's still, you'll still be surprised with how all exchanges sort of still have the same area. And at the end of the day, on execution, you can look at getting into it. But 61,245, just double checking. I mean, it goes down as well to 61 to 61,695. So 61, what am I saying? 61. Yeah, so that's the 61,245, 61,695. Yeah, okay, so that's pretty much to the low down there a bit. So yeah, we'll see. I'm just going to keep that on there, but that's not a huge thing. I'll worry more about that when I get that under the higher time frames to be taking a look at. So we'll create a group of drawings, and we'll say weekly levels, and then we can close these ones here off. Okay, so let's move on to some more local daily price action. So we'll come over here and we can just have a quick look. It's a bit of a mess. But it looks like we have pretty much bounced off this old naked value. Now I want to have a look. I don't love looking at these because we've got a lot of chop through here. So now that we're away from more of this, let's jump over and ignore that and let's come to something more localized. So the more localized we had was this got rebalanced and pushed back out. So you can see how this hit the bottom, beautiful retest down through here, and took back off and pushed us back up to reattempt. At the time, we had the 2 week CVAL. We tried to get back in, and then obviously we held above it, and then we've shot down. So again, always just reading the narrative of where we've come from. But we can see this here is a thin spot that got cleared back out. So if I just want to re-merge these, so 3-day composite, just here. And now we've opened back within that 3-day composite. Now for a bit of recency as well, I am actually going to add in something a little tighter, which is this single value area low, because they were naked. So we've pretty much, if we actually look at the reaction of what's happened, is we got, you know, a lot of sellings going on. We actually had a retest of this 3-day CVA just here, and we've rotated and opened within, so almost sort of double rotational. We've opened with inside a naked value area, which means all of this liquidity has not been touched. And I'm still keeping some duration from this 3-week. And you can see, obviously, as I just said before, we expand the clusters. We are still respecting that 3 weeks. So sometimes if you think, gee, should I be using this composite from, 5 months ago? And you see price doing such clean respecting, yes, you should. So that just confirmed that we can say the daily still respecting 3-month CVA from, let's just have a look at the date range. So it was July the 16th to July the 18th. July 16th to 18th, and opened within a naked VA. What's the word? Nested inside the 3-day. Now, I'm just gonna, when I say naked VA, I'll just put in this parathesis. I just want to put in these values here. So we can say that, well, let's double check. So we have basically open within. What have we already done within here? We've already retested the upper edge, and we've pretty much already retested the POC. So we're dual rotational. So let's get these values now. So that's 64.86. 64. 865. And we'll call it, just to code name it, N bar. And the value area low. You wonder why I don't put POCs in. Sometimes I do, but again, they're a messy place to take a trade, and I'm trying to teach you guys not to. You want to wait for these extremes. So, I mean, locally, this was a trade, but why are we not aiming for here? Or, we go here, why are we not aiming for here? Because we're rotational, rule 1 and 5 within here and on the greater extreme. So these now become potentially very, very responsive sellers and responsive buyers, if that makes sense, because we have, you want to see something like, you've got to double it to get out. You've got to double it to get out, if that makes sense. So that's just something that we're going to be looking at locally at the moment. So not looking at the POCs, these can get fucked. If you want to be trading at a level that you're not taking stupid decisions. So 63,890. And our 63,890. And that's nested in the 3-day CVA. Therefore, we are rotational within both profile and composite. So we should take a aggressive approach to extremes if we are scalping. No beefy trades within this area. Okay, so we can have a look, just double check if there was any anomalies. I was going to mention, okay, so one other thing now that we have, so we have this old 2-day, and now we got, so what happened? Well, let's have a breakdown. We got rebalanced within here. We rejected the, what have we got in a sec? We got merge. Yeah, so there's a 3-day, there's a 2-day. We rejected the 3-day. We tried so hard to remain within that. Now I know that comes in around the VWAPs and stuff. So again, you get this bullshit. And what we did was, we'll have a look at these clusters, is we ended up, so this was yesterday and then the day before, what we ended up with this sort of nasty, I say it's nasty, I should say boring shape profile, which opened back up in the center of this 2-day. And that's basically led us for a lot of yesterday to remain rotational until we wait for a shift of condition. So you can see just how boring the price action is. Again, trying to get above that 2-day. This time we're not even hitting the old 3-day, just showing poor high on the top, just showing how sort of nasty it is. So if that's again reading the narrative, like couldn't even touch it this time, couldn't even break out of this one. So straight away you're getting a bit of an idea how weak it is and just how much we're obviously set in at the moment from this rejection, that we are hunting liquidity lower and we're not, finding strength to come back up and rebalance into this LVN area. Cool. So what does that lead us? So we now have merge these two together. Now, here's a question. We're open down here. Do we really want to merge these two together? The value is the same. So I'm going to say yes, but again, I would have preferred to have something a bit more inside. The rule base of the 50% overlap still does make sense. So we can say, and it doesn't change a lot because it has to get back into this 2-day as well. So it's nested this composite. I still add them in with a wide initial balance. This is why it's also rotational between adding these two together. We do have this little thin spot down here, which comes in right on top of the 3-day composite. So, if we do manage to push all the way up here, we can potentially reject with this little LVN area, if that makes sense. So, I don't always put all the anomalies in. I want you guys to actually be able to go in and start reading this. Otherwise, these documents just end up absolutely ridiculous. But what I will say is 65,755, before I forget. So we've got 65. I'm just forgetting today. I need another coffee. What did I say that was? 65,755. is a new 2-day CVAL above us. And what do I want to note? Within the old, double checking again, 2-day. 2-day CVAL. And we can say that if I mention the 3-day, still respecting the 3-month, or 3-month, 3-day. CVA from July the 16th to the 18th, open within the naked value area. So there's the naked value area nested in the 3 days. So what I do want to do is just quickly put in these values again because they are relevant now. And so that one there comes in at 65,150. 65,150, 3-day. Actually do it the other way around. 3-day CVA. Oops. And we can also put in the let's see down here, and that is within side access. 63,565. 63,565. Yeah, within the old. Okay, so no VP trades. We're within the old 2-day. There's no, yeah, 2 days. Yeah, yeah. So it's a new val within the old 2-day CVAL. Locally, we have a LVN guarding the 3-day CVAR, and we have a buy tail excess at the bottom of the 3-day CVAL. Okay, so very quickly, let's jump over yet again, and we'll start adding in some of the data. Now, there's a lot of composites going on, so I just want to try to not have too much shit going on the screen here. First thing I want to do though is I want to add in, I'm going to add this one in here, the new 2-day, so 65,755. 65,755, let's 55, hey. 5755, yep. And we'll just put new 2-day CVAL. Then what I also want to put though is I definitely want to re-add in on this chart the 3-day. Well, it's easy to grab these levels, hey? So 3-day, 65,150. 65,150. And that is the 3-day CVAR. What have I done? 65,150. Why are you not coming up? 65,150. Ah, okay, there you are. And then I want to add in obviously the CVAL. You're coming at 63,565. 63,565. And you can see the little bar tail where the axis is down here. You got the 3-day CVAL. So your old values. Now, just to make out intraday stuff, but if we want to have a scalpy. Now I want to be looking. Now we're rotational. That's why I'm looking for scalps. For trending, not looking for scalps. Makes sense? I'm looking for trends. So recap. Where are we open? Inside here. Inside here. Wait for a shift to condition until I'm wrong. But until I am wrong, the game plan, today's playbook, is rotations in here with the potential of extremes to be ran out. But I'm more keen to short here and long here and keep this train moving for as long as it wants to go sideways. Could even be over the weekend. We'll just have to see. So the next things I wanted again, let me chuck this around. I'm probably doing your heads in. Is we wanted to say the end bow 64. Say 64.65. Might have make you a little lines like that. And you are the, that's not naked, but I'm going to call it because it makes sense to me. Naked value area high, daily value area high, like so. And we also want this one. So I just want to double check that CVAL is correct. 3-day CVAL, 3-day CVAL is 65,150, correct. And for the naked bell, we came over 63,890. 63,890. 63,890. And you are the naked daily value area low. And now we can see this little area through here, 30 minutes. Oh, so what happened here? So the 3-day CVA, a little kickoff here. Now we are, there's a point of control in here somewhere. Now we are going to be just yucky through here. Lined up. But ideally, we're looking for rejections here and rejections here. Now we just move across on the 30 minutes. Look. We have a nice big wick. Now, it's not exactly a rejection block, which I don't like. I actually like it when you see another wick down the side and you can actually see the block. So I'm a little skeptical about that. I feel like it could get ran. Just some conviction and stuff from my years of trading I picked up. So I will potentially be, I can look at the order flow in there and I can see if there's actually anything trapped or anything that's worth a potential. Otherwise, I'll probably look more for, well, let's be honest here, guys. Where are we going? What levels are we chewing through? Let's add them all on just for a second. Put these into daily. Daily. And I'll lock them. And let's just have a look at this area through here. So, I'm just looking at the past history. We had the deviation of the high. We had the LR, low resistance liquidity run, all these. Cleaned them out. Pushed up again, put another LR in. Cleaned them out. And we failed to hold up here. I think 2 weeks CVAL. That will make sense. As we can see over the weekend, we're like, let's make sure we hold this level, push higher. Volatility, or really try to push back up. Projecting the monthlies. Tried to hold, what's the new 2-day CVAL? So this would be broken into 2 composites. This is why we bulls tried so hard. Could even get back above that. So there's a 3-day CVAL in here, remember? Could even retouch that, and it could even get back out of that. I think it was 2 days CVAL. Or was it the other way around? You just rewind the video. You can see what I was talking about. So at the moment, we've got this price action through here. Here's what was really narrowed down. And we are just going to remain rotational within this area until proven otherwise. Now, just having a look as well quickly. The 3-day comes in 1, 2, 3. Here is the composites. So a distribution profile would look like this. We expect bounces from here, and we expect shorts from here while we remain rotational. This is just simple. It's actually really simple day today. Overall, the trend is down. Therefore, we need to favor the fact that we have lost this level, rejected this level. Didn't on Coinbase, but it did on Perps and Binance. Big areas to lose. And now the 5 months. We need to reclaim here. Obviously, there can be a lot of rejections through here, so we got to be careful of deviations. But reclaim, proper acceptance, space and time, duration, then we can approach the high again. But we've got to clean these out. This is mitigation. So either it can do it with a high amount of spot volume twapping, where it just pushes straight through, see you later, you don't exist, or we get regular trading action, which is just trying to chew through these levels and then eventually coming back down, maybe even into here, reaction, long, send it. But until then, my bias, my narrative tells me where I rejected, where we are, where we're going to rotate through, and, you start getting people, get ready. Oh, my head and shoulders, bruh, my head and shoulders. Yeah, sure, it could be a thing, but like what's really causing it? Well, it will be the large FVG in the high. It'll be the fact that we're coming back down below these lows. We're putting that in. We could reject off there. We lose this area again, and then we could definitely come back down. But, you start thinking to yourself, okay, well, let's just say this is perfect. And I'm just calling this now, but it might not happen. It's just an idea, okay? It's a bit of a forecast. But what if we get all the meme traders putting this in, put the head in, we have these lows, the FVG kicks us and we lose this again. We come down here, we get to the neckline, we actually go down through the 5 month, all this area through here, and they're expecting, what is it they expect? They expect from the neckline to the head of distance to head back down. What if we just cut them off in here, reclaim the neckline, send to all-time highs, and we use all of these guys under here going short, expecting the distance of here and here. Sorry guys, I'm waffling on, but this is the kind of stuff you see as you're trading. You want to sort of come up with ideas like that. But without getting excited, we can just know that we're rotational. So these are the levels that we have now on this chart. And we're pretty much locally LVN, we have built excess at the bottom of the 3 days. Yeah. Which could be a bounce location, range low anyway. This could send us back up towards 5-month hock to wait, see there. However, today we are rotational with law 1 and 5 between recent naked VA and was it the 3-day CVA? Cool. So now we're done with market profile. We're not going to talk about anomalies. I've already gone for fairly long. So if you're sitting around still watching, well done. We do have more to go. But you can break up the video if you want. If this has been too much of a head fuck, not going into any other stuff at the moment. What we will be doing is now applying our long-term VWAP indicator as more of the compass, giving us a bit of an idea on something more familiar to on these price action charts. So it's our premium indicator suite, the Market Masters LTVW, and I have now applied it onto my chart like so. I want to set the top left to the daily, the top right to the 12, the bottom right to the 4-hour, and the bottom left to 30 minutes. Now I thought I'd just sort of go through and set this up. Something else I like at the moment is the rolling VWAP of 1 month. And this is not our indicator, this is actually just a trading view setting. And so what we have is the settings for it is just 30 days, RVWAP under indicators, and you can sort of get a bit of an idea, it's not too bad, where we have these rejection, push through, try to reclaim it, push through, sort of held it. It's not super clean when it's not aggregated, but nonetheless, we have some levels down through here, and it sort of comes into that FVG idea. So we have just that extra tick that we actually have a bit of support that could cushion the pushing of this coming down and potentially giving the rotational traders, the smart conservative money, their TP here. And for some, okay, something else is take this home with you, a little bit of a tip. LTVWs obviously have a value area high. They have the value area low. They have the VWAP. But we can break things up still, like we would to say, this is 50% of the range. We can then internally have, this is 50% of the range in here. This is 100, this is 0. So what we can actually do is we can say, where are we at the moment? Well, what has this year done? We've pretty much remained rotational, minus a deviation, within the up band. Now, I teach in the course, when we see this kind of thing, it's bullish. It doesn't matter, it's fucking bullish. The fact that we deviated below here, how much time have we spent in discount? Not much. So what do we do when we haven't spent much time in discount? Well, we need to find a new discount. This, deviation. So discount, or deep discount as you know it, discount, 50%, premium, deep premium, above value. So you can start doing that in your head as well. Where are we rotational on the yearly? We are currently, so the technical the technical is we are rotational between the developing yearly value area high and value area low. And that is technically correct because the entire distribution profile is like this. And here's the value area high that we pushed out of, the value area low that we haven't even touched this year. But we can start going, all right, well, this isn't working for me. Where are we now? And you go, well, now this is the distribution profile. Below is value area low. And this is what I was saying on the TPO before about I wish I could split profiles because I'm now splitting this, and I'm sure you could probably make a VWAP somewhere through here. And we're about to come down to that VWAP that intersects with here, with the FBG, and we're about to bounce back up to this FBG. Could put heads and shoulders in, come down and give this, or come down and scare people and take off. All these ideas run through your head, but they're all just stupid ideas that I'm not going to go and forecast the internet trying to get likes. I'm going to wait for it to happen, and I'm going to trade what I can trade. And I know at the moment, intraday, I'm rotational, and I'll be scalping if I actually trade today. Might take a day off and trading all week. So I'm adding a few little extra gems and stuff in on the way. But what we're doing now is we're setting up this LTVW for those who have it, those who don't, go and buy it. Like, if you want money, go and buy it. Simple. It makes you money. It makes me so much money. So we have the yearly, and here's a quick way to do it. I've set the time frames daily, 12, 4, 30. Click on it once, copy and paste it. Opens up. Go in, make sure you got aggregated BTC on. If you're using altcoins, turn that off or it won't work. We are working on automating this, so it just reads the chart. Then under the VWAP, you got yearly. Then we're going to go to the quarterly now, like so. That's quarterly, 12-hour quarterly. Adding this one in here. Settings, chart, not chart. And then we're going to go monthly on the 4-hour. And more paste over here. And now we're going to go to the weekly, like so. And we'll just stretch him out so we can actually see what's going on. So we just want to get them all so we can see, a decent amount of what's going on with the picture. We want to see where's the values. Sometimes it takes a while for the values to come back over. So we've got the fresh monthly. That's why this looks like a little clusterfuck in here. This is where it's going to be interesting that we're rotational with inside the month of June. Now we have the month of July freshly opened, and now we have a new developing. So the new developing monthly for today is the same as the developing daily, if that makes sense. So this is how they progress. If you don't know how to use this, I'm not going to go through it because this video will end up going for hours. We have videos out on it already, or the best way to learn is to do market mastery through our course. So let's start going through. So how do we do this? Well, we pretty much do the same thing as we did earlier, but just to jump ahead quickly while I've got your attention before you go, before you leave, if you come over here now and you add the daily, you add the weekly, you add the 4-hour, we can start to just come through just quickly for those who understand the indicator. And you can be like, things that make you go, okay. 5-month CVAL, last stand comes in right on the 30, right inside this FBG. Now let me just put that FBG over the top again for a second. How's that for a bounce point? I'm bidding here. I'm not telling you what to do. Might get rinsed, might go down to here. Like I said, might do that 1-2 thing, but I will be bidding off the 5-month CVAL. Where will I target? Well, it'll be a pretty good trade. So I'll probably be, looking more for a reversal. But as I get more towards the premium, where we had a bit of an issue up here at the time, but definitely taking some profits here and looking for the FVG to thin out on. And if we get an all-time high out of it because we front run the head and shoulder pattern, perfect. But there you go, straight away. So now that this is a way we can bring those TPO levels straight over. So we have the yearly, then we have the quarterly. Well, let's have a look at the quarterly now, what's going on. Okie dokie. So we'll talk about it in a sec. We lost the developing quarterly value area high. But what was the resistance of the developing quarterly value area high? What was the reason for it? Well, it was probably the fact that we had this 5-month point of control that was trading underneath, messy area, yet lost it. So we fell underneath there. So that's pretty straightforward there. We head down to the monthly. Now we have a new monthly here, so it's going to be nothing to really see here, just the new levels that are coming in. So we've opened rotational within this monthly area, but we do have the obvious. Let's see something here. The month before, so there's the coming in on the June. So this is the month of June in here. We have this CVAL lining up with this 4-month, lining up with 30, lining up with the 1-day FBG, lining up, yeah, with the previous. So this was that val, but it also has now lined up with the new monthly VWAP. So look at all those confluences across this area, this 62, 162K area down here, even 62 psych, if we lick, is the place to be bidding. Not telling you what to do with your money, not financial advice. I'm just saying it's somewhere that I personally will be bidding, and you do your technical analysis. This is just for educational purposes, yada, 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 okay? Don't take it lightly though, you do you. And just for the weekly as well. So we're gonna also have a look in here at the moment. So we have 3-day CVAR. Above it, we have a high volume point of control, which comes in on the daily TPO as the LVN, most likely, or just above the LVN, maybe a stack, ledge, as they call it. So, it's going to get pretty choppy up through here. We can probably rotate down here, get pretty choppy, maybe get like a push through here. Could get a push in here. Like we'll see what the day does. We can look at the lower time frames and obviously the rotational trend reversal candles and stuff to actually be able to pinpoint where those inflection points are and where we can participate in business. So looking down through here as well at the moment. So we have, what are we? We're developing down. We've lost the previous week value area low. We failed to hold the week before's VWAP. So where are we going to go? Well, there's the old previous week VWAP, and there's a HVN here. So we could potentially front run like we did here, the old VWAP, or the old previous week val, sorry. Or maybe this time it's a trap here and we actually do get the liquidity, because if you were aiming for here, it was in my prep, this is a place that I wanted to long, the 3-day jumped in and basically showed how bullish it was. And of course it was, we got nice and high from there. But now it could very well be an area that they finally want the liquidity from here, because people who went long here are going to put their stops underneath here. And again, if we do just drop down the 5-month last stand with the FBG and stuff, this would be the area to go into and then push back up and then work towards this area up through here. Okay. So look, I might actually, I can turn these off. I want to go through this quickly. I'm not going to write it into the prep because this video has gone way longer than I expected. But the prep, once I do show you through this, I'm going to go put it in my prep, finish it. And for our premium members, you'll get to see the prep. And for those watching for free, it'll probably be outdated by the time you're watching this. However, you want to get these preps every single day, and I'm going to do a few live ones of these. Marketmastery.io. You can go in there. We have Discord sales, we have the indicator sale, we have the Market Mastery 3 course sale, but we also do a package deal as well. That's a great deal, highly undervalued. Okay, so quickly let's go through these LTVWs and actually just look at them for what they are. So we sort of touched on this before. Rejected the developing yearly value area high, the global line in the sand. Where are we potentially rotating to? Developing yearly VWAP. That's it. Like that's just technically it. Nothing more to it. Quarterly, what happened here? So we'll have a look. Close this to stand the window of it. So we had, I just want to highlight this actually. We had this Q1, 68, 190, where I want it. Just going to use a different line. I really hate that line. Okay. 68, 190. It's better. Oh, was it 60 or not? 66, 190, idiot. Dyslexic, I swear. Okay, in style, just make it like a nice pale color. And this is the Q1 value area high now. Where or how did I get that? If you know the indicator, you should know this. What was the last month? March, Q1 value area high. I just want to quickly drop down on the 30 minutes. And you can see, actually no, it's 4 hour I want to look at. The bullshit that was over the past 2 days, fighting that inflection point. Gets up, hits this block after a news event, and then the ass falls out of it. Cool. So we're on the quarterly, so we'll go back to the 12 hour. That's where it works best. And you can see we have this HVN, which wasn't like a pinpoint accurate, precise thing, but nonetheless, it the HVN tells me that there's a larger than average amount of volume in that area, therefore risk off, motherfucker. So you can see we've come up, we've hit that. It's not as clean as what the daily is, but nonetheless, we've done the local SFP, we've rolled over, we've put the FVG in, we've failed to stay above, we have the 5-month point of control, we have the 2-week CBL, we've moved down. Where are we? Where are we traversing to currently? The previous quarter VWAP and the previous quarter value area low. So we're still rotational within the previous quarter value area low. But what's not looking good at the moment, it's not the end of the world because this is a dynamic level. And these are static levels. These ones are better. But the dynamic level, we have lost it. And all this was a claim of structure. It happened so quickly. This is nasty. So the rotation towards here now makes a lot more sense. Okay. And just having a quick look down here on the monthly. So the things that we've had here. So we have a new monthly now. So the new monthly comes in at 66, well, we call it 66,640. And I just want to chuck some levels back over it again to see, is there anything super clear? There's 66, so just above it, it's now added an extra resistance to the 2-week into the 5-month point of control, which is pretty atrocious. So that's something you can just chuck it over the top and see if it's lining up with your market profile levels. So yeah, going over it though, we had the rejection of the previous month value, well, not previous month, the month before value area high now. We have a high volume point of control. So we do come back up, it's more resistance yet again. So it depends if we get a liquidation event where we actually come up, tap that, scare these people, we roll down, we have a double top, which is nice because it means we will come back up and take it out eventually. But for now, we can see we're not up there. We had the rejection. We rejected the, it's now open, the previous month value area high, but yesterday it was the developing. And we're underneath it, so we've opened with inside this area, which means we're rotational within the old previous week value area low, previous month value area low. And if we do remain bullish because of all the stack confluences that we talked about here, I would say we are rotational within here. But ideally, you want to see something where it's like more sort of progressional and building back up again to get back out of there. Whatever it does, I just don't want to see this coming back down to be hit again. I really want to see, price to remain somewhere above that. So this area here, as we've already mentioned a few times, is looking like a good place for the bulls as a last stand. And the last one to look at here is the previous week. And we can see, so we're still trading in the week. We did our very best. As I said in the other prep, I would like to have remained above the previous month VWAP because I was hoping that we could have closed, with inside it and potentially held our ground through here, but we did not. We know why the 3-day CBAR, the 2-day CBAR, the 3-day CBAR, we had, and obviously the 5-month point of control, etc., etc. We had the developing band, so we have just lost it, and we now remain imbalanced down after a nasty rejection. So it's going to take a bit to recover. We haven't not held so from the week of back there. Okay, we've got the week of back there. We had the VWAP that you can see they tried to hold, got really messy again. What do we do trading around these? They can become really messy, and it got really messy, so no place to be taking longs or shorts. Now, yeah, there is a bit of an exception with the previous month VWAP, only because it comes off big levels, that becomes a confluence, not the previous month VWAP, but the fact it is actually on a big static level, like a 5-month CBAL, if that makes sense. So now, looking at this technically, that we've actually lost the previous week and bow, we now have a fight of either responsive buying, stepping back in, or, and it's looking like they're winning, we could merge back up. Now remember, we've got all the, I don't even need to do that. I can put the dailies on quickly. Dailies, 71. So we can see where this HVPOC, the HVPOC that comes in here, and that comes above the 3-day CBAR, and we've got the naked as well. So if we do come back up here, like previous week bow, is obviously the line in the sand that needs to be reclaimed to head towards, right, when chicken dinner, only 2-day CBAR. So we remain rotational between here, we're rotational between here, and these would be the extremes of liquidation. So again, it's not a very clean place, but as this thing progresses down, we'd be wanting to look for, so build some price action here, allow this to flatten out, attack the 3-day CBAR, then attack, by then, what are we looking at? Friday, Saturday, so it could be over the weekend, it might not work, it could be next week. Then we'd be looking for a re-attack plan. But it could happen because we could be front running that big level that I just showed you. due to the fact that um, where we're looking. So yeah, this level down here, due to the fact that if we all have our eyes on it, there's plenty of liquidity under these two relatively equal lows. Therefore, it could be, play around, sweep that, go, and then head back up. And these guys like, oh, such a good entry, and then we never get it, or we do get the head and shoulders pattern, and then we wreck these guys. So pretty much, yeah, relatively equal lows. If you've done the course, you understand the naked price action SMC stuff. It's just really, really simple when you actually know what you're looking for. And we are now rotational within this old weekly value, imbalance down on the fresh one. So, we know what we're looking for, finish that up, take it, or further down if that's what we get. So I'm going to pretty much leave you there. I've been going on and on and on, and my voice is sore, and I still have to finish the prep, and I have a million things to do today, and this was not supposed to go this long, but here we are, pretty much a whole lesson. So if you are watching this on YouTube or any other platform, marketmastery.io, jump on there, and you'll be able to see the products and services that we have. It is well worth it. I'm very, very proud of my product. Basically, we have the go through the ads, Trinity to Success. And this is what we believe with Market Masters, that you get the education. So we have like 18 lessons. They go for around 2.5 hours each. Learn as you go. You get access for it indefinitely. It's not a subscription. That's yours. Only subscriptions that we do have, which we have deals to get a decent amount of, with a deal, you'll get a decent amount of community access where, don't left in the dark. Like we're happy to mentor them in and out day and night, helping people with their questions and answers from just general trading to the actual course. And we also have custom built indicators from a very, very talented team member of ours who I pitched the idea to him to get these sort of specific indicators working and thought it was a bit of a pipe dream, but he surprised us all. And the suite is um, growing more and more and more. But yeah, that one I just showed you is the LTVW. It's aggregated, meaning it mathematically gets an average of all exchanges to produce the levels, and in turn gives you some really, really, really clean levels. So thanks for watching, guys. I hope you got a lot out of it, and I hope to see you in the community soon. Please.